your ability to be able to easily identify a downward trend or an upward trend is the number one skill you must have as a trader. And there's some downward traders that are very, very deceptive. If you have not been learning how to study, check charts, you might fall into a coin that will look like a downward trend, but if you don't check the pattern very well, that coin can dump more. Like I gave us a signal on big this evening. The moment I gave that signal, I went to go and identify the key support level very, very well. Because there is, if I don't see any bullish reversal pattern for me to enter that coin very fast, and I'm still seeing more red colors going down on the forward daily chart, I will not enter. I'll go and look for the lower. See what happened to this coin now. These are the key levels, key support level I saw. I think I saw it on the weekly charts. I have to go back. I went back to go and spot the previous support levels in the past, because every coin always tests all those psychological levels. That's why I support a previous support before another one. So the moment I draw the horizontal line, I knew that this coin, I not seen that I went to go and study this coin on the weekly chart first. I don't do. So I know that coin will surely do what? Break this first support level, second support level. So the moment it break the support level, I think I sent the signal yesterday before I slept. So the minute I sent that signal, only for me to go and check RoyalQ, and I saw that bake that I've been trading since 2021, they want to now delete it. No, it was on monitoring, it's on monitoring. And anytime any course on monitoring, that can be going to dump more. And I quickly told us early in the morning, go and pause. Is it one not yesterday? They said, go and pause this trade, it's going to dump more. So the moment I woke up in the middle around 1, 2 a.m., someone told me that it has triggered. And the person didn't remember to go and stop that trade. But I took the risk. In one of my accounts to allow the trade to run. So it triggered at this price, at this 0.003. And when I woke up, it moved up by almost 1.5%. I just sold off. I sold off. So people that didn't, they will not discover that they will not stay longer in this trade now, because the coin has dumped more now. It has dumped more. But in the 4-hour chart, it might recover. Anytime they put a coin on monitoring or on of this might about to finish. Any coin they put on monitoring might be delisted, and that coin will be dumped more. But miracle always happen on this coin. When the coin is dumping, all of a sudden it will pump. But here it has formed like a inverted pin bar here, and it's already in the oversold region. So we might not guarantee see this coin pump back up. So anybody that is in this coin, I will send it to the group. Please, the moment the coin comes up, it might pump more, but get out from that trade. Get out. So I don't have much data, and I have office. I use things to watch. And my data is going down. That's down 12. So I'll just talk about two type of trends you need to know. You need to check. when you are trading. Now we need to learn what we call bullish candles. Bullish candles. What are bullish candles? Bullish candles are candles. Bullish candles are candles that show that buyers are already stepping into this trade and they are about to push the price up. So we have different type of bullish candlestick pattern that you need to train your eyes to see. Number one is the hammer pattern. Number two is the morning star pattern. Number three is the three white soldiers pattern. Number four is the bullish engulfing pattern. Number five is the bullish three line strike pattern, followed by three inside up, followed by dragonfly doji. Some of us will be saying, hey, which in this guy they talk about? Don't worry, gradually you will learn. I've done it in the past. We have the piercing line pattern, bullish marubozu pattern, bullish abandon baby pattern, rising window pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It is not necessary you know everything. I know about 1, 2, 3, 4, 5, 6. So I know about 6 offhand from all these patterns. It's not compulsory to know everything. So tonight I will not be talking. I'll be talking about maybe that first 3. Don't want it to be too much, because you need to go and learn how to specify them. So let's start with the first one. Now this is the number 1 bullish reversal pattern. What do you mean by bullish reversal pattern? The bullish reversal pattern is a pattern that you see at the end of a downward trend, like this coin you are seeing, BIC. This BIC is in a complete downward trend. It's already going down. So it is very clear that coin is on a downward trend. It's not on sideways. It's not moving up. So it's a very clear downward trend on that coin. So if we can identify any of this type of candles at the end of the downward trend, then we can see that this coin might begin to pump. This coin buyers might begin to step up. Are you not seeing it? That at the end of this downward trend, I'm waiting for confirmation that what kind of candles pattern will I see here that will symbolize and give me a signal that this coin is about to go up. This is a very clear downward trend. So when you see that kind of pattern at the bottom here, you know that yes, this coin has this tendency of recovering and pumping. So those are the patterns we want to learn tonight. This coin is going to move up. I'm already seeing the sign. So anybody that's in this coin, if you didn't use the AI mode, the bot will have bought more. The coin I will have gone down by, can see the coin has gone down by minus 9.5%. Minus 9.5. So if you use the AI mode, the bot might not buy, especially if you don't have big capital, it will be looking for best time to buy, so it won't consume your money much. But this coin might move up to the entry price by tomorrow, all things be equal. So what kind of pattern do you want to see at the end of that downward trend? Number 1 is this hammer pattern. The moment you see this kind of hammer pattern at the end of that downward trend, this hammer, it has a small body and a very long tail. Sometimes the top of that body, this is the body of this candle. This is the tail. The tail is always 2 or 3 times the size of the body. This is the body of this candle. Are you not seeing that the size of this body is like the length of the tail is like 3 times of that length of that body. So this shows us that anytime you see this kind of candle at the end of a downward trend, then it's a bullish reversal pattern. I have seen this before. Anytime you see that kind of pattern, that coin might pump massively. So the hammer candlestick pattern is a bullish reversal pattern that signifies a potential turnaround in price. It typically forms at the end of a downward trend and signals the possibility, not a guarantee. It signals the possibility because when you want to pick to use this pattern to enter a coin, you need to also use other confirmation from candle, some other indicators to confirm. So 2 or 3 other indicators must agree with that pattern before you can say yes, there's a possibility that this coin is going to move up in price. It's called a hammer due to its shape, which resembles a hammer with a long handle and a small head. And you know, most of the hammer that we use has a long handle and a small head. So what the pattern looks like, the hammer pattern is formed of single candlestick, which has the following characteristics. Number one, a small real body, which I just talked about now. It has a real small body. The body of the candle, which is the difference between the opening and the closing prices, could be small. This body can either be red, bearish, or green. What does that mean? It means that the opening and closing of the body of the candle, if you have followed me before, where I talk about, I analyze candles. A green candle open from here, no, open from here. A green candle, a bullish candle open from here and close here. Open from here and close. That's why when a green candle opens here and close here, there's a tendency for another green candle to form here. Open here, close here. Another one will form up, open close to the last highest point. The dark green candle close, then it moves. So it will now be making the coin to moving up. So the difference or the space or the distance between the opening price and the closing price of an hammer is always very short. That signifies that the body is very small. So it also has a long lower body, long lower shadow. That shadow also means the tail. The most defining feature of a hammer is its long lower weak shadow tail. This shadow should be at least twice the length of the real body. So these are the conditions you must, that the hammer, or they also call it pin bar must have for you to know for sure that this is a bullish reversal pattern. Also, little to no upper shadow. So sometimes the upper shadow or the upper wick, this is the upper wick, might not have the wick, they might not be weak here or be very small. That's another condition the hammer or pin bar must have. And the position within a trend. For the pattern to be considered a hammer, it must form after, at the bottom of a downward trend. If the same shape appears after an up, it's called an hanging man. Are you getting it now? If you don't get it, forget it. Sorry. So they already teaching us another pattern here. Let me draw it for us. It means that at the end of downward trend, downward like this. If you now see a green, it might be, you see an hammer like this, an hammer like this at the end of a downward trend, then it's a bullish reversal pattern. Tendency for the coin to go up. But if you see this same candle, me, I'm not learning as I'm talking though. I'm learning. I used to know that this is an hanging man that resembles the hammer. But when the hanging man is at the end of a bullish or an uptrend, what does that mean? That means if there's an uptrend like this, uptrend, and at the end of the uptrend, you now see I don't clear. Oh, what did I clear? Undo. Okay. You now see a candle that looks like an hammer at the top, like a man we want hang himself for 3, because say life don't tire am, then it shows that this coin is about to dump. So we can use this kind of pattern to trade on future. If I see a trend like that, is the coin is going up, and the top of that uptrend, there is a pin bar or an hammer hanging up. We call that kind of pattern a bearish pattern, where the last hammer candle at the uptrend is called hanging man. So pattern psychology. To fully understand the hammer candlestick pattern, we need to delve into the market psychology behind it. Previous downtrend. Before the hammer appears, there is a prevailing downtrend. This means that the peers have been in control and the sentiment is now pessimistic. That means they don't have any hope again for the sentiment is pessimistic. They are not optimistic about the coin again. So they're already giving up. Sellers are already giving up. So intraday decline and recovery. On the day the hammer is formed, price generally open and continue to move down, suggesting that bears are still trying to put the price lower. Are we hearing me? I will not talk too much about any patterns so that I will not, because many people might not really understand what I'm saying. However, at some point during the day, a change in sentiment occurs. Buyers step in, pushing the price back up, often closing near or slightly below the opening price. So bulls take control. The long lower shadow represents the distance between the lowest traded price of that day, and this is a very important point. I need to understand it too. The long lower shadow represents the distance between the lowest traded price of that day and the closing price, showing a rejection of the lower prices. This signifies that bulls are beginning to gain control and that bears are retreating. They are going back to their hiding. They are going back, they are hiding. Meaning is that you can see that just like the way you see a Chinese language, it doesn't make any meaning to you. But the person that will own the language, they understand that they are pattern. It's a so that is the way candlestick also is in trading. The moment you can understand the meaning of all those, the shape of those candles, the way they are arranged, they are structuring, then you are now a professional trader. That's why the moment I open my charts and I see any charts, immediately I will know either to run away or to enter. Anytime I force that trade, because I want to trade, I will be trapped. So they are telling us that the long lower shadow that we see in a candle hammer shows that this place has touched the lowest price on that daily chart or on the 4-hour chart. That means that price has been rejected by buyers. So at the tail of that hammer, that means that last price on that candle, it has been rejected by the buyer. Say we know they agree again. We know they agree again for seller to sell this coin again. So the buyers will now begin to reject that price. Say we want to carry this coin go up. So this kind of candle shows that this long tail shows the closing price of the day, and it also shows the rejection of the lower price. So at the end of the day, there will be a Vasa confirmation. So while the hammer itself is a potential Vasa sign, it's also essential to look for confirmation on subsequent days. So in conclusion, the hammer candlestick pattern is an essential tool for traders and investors to identify a potential bullish reversal after a downward. So that's that about hammer. I think I once had a screenshot of, okay, let's go to the next. The next point is the next pattern is called the morning star pattern. The morning star pattern. I might not trade and do too much training. I'll not touch too many patterns so that it will not be too much for us. If I talk about two today, I will continue on Friday so that you can go and check those patterns explained by yourself to confirm by yourself that yes, this is what Mr. Aderemi was talking about. So this is what we call morning star pattern. It's another bullish reversal pattern. We always see this kind of pattern at the end of a downward trend. At the end of a downward trend, when the coin has gone down, gone down, gone down, gone down. So at the end of the downward trend, this kind of candle will show, a red candle will show, followed by a candle like this. This candle is called doji. Sometimes this candle in the middle can be red, can be green. But it's much better that the coin, the candle might be a doji. What do you mean by a doji? A doji is a candle like this that does not have any body, or can have this very tiny body like this and long tail, or it can have a small body like this one we are seeing here. And after that, a big candle will now form after this doji. So if you see this kind of candlestick pattern at the end of a downtrend, it's called morning star. Morning star pattern. The morning star pattern is a bullish reversal pattern that signifies a potential change in the direction of the market from bearish to bullish. It typically forms at the end of a downtrend and indicates the dawn of a new upward movement. Hence the name morning star, symbolizing the start of a new day. I'm also letting you know. So the meaning of that morning star means let's say like yesterday, there was a lot of downward trend, and we now see this morning star pattern. It shows that hey, there's a new horizon is about to be formed. A new dawn of upward movement is about to be formed, which will make the coin to pump up. That's why it's called morning star, just like the star see in the morning. What the pattern looks like, the morning star pattern consists of three candles. Number one, first candle. The first candle must be a long bearish red, like this one that we saw here. The first candle must be long red after the end of the downward trend that continue the prevailing downtrend. It has a long body showing a strong downward movement, number one. Number two, the second candle can be bullish green or bearish red, and is typically a smaller candle. Hello?
Yes, sir. Good evening. Please, I'm not seeing the screen. I don't know if it's applicable to me alone.
I'm sharing my screen. No, I can't be doing this thing without sharing my screen. Are we seeing my screen? No. Please type yes if you are seeing my screen. I can't be doing this kind of training and screen is not being shared. From my end there, I'm seeing that I'm sharing my screen. Please, if you are seeing my screen, type yes, please. Type yes if you are seeing my screen. I want more for confirmation, please. I want 2 more confirmation. I'm stopping at this. See, maybe check your own end though. People say they are seeing my screen now. People are seeing my screen now. Check your own end. Are you seeing it now?
It's not coming up. Let me leave the meeting and join again. I don't know what the issue is. Let me leave and join. Okay.
Please, I need more confirmation, please. I need another one confirmation, please. To be sure that my screen is being shared. One more confirmation, please. Somebody should help and type. Oh, it won't take you, it will not cost you cost money from your account to type, I beg. Please, I need one more confirmation if you are seeing my screen. One more person, please. Are we not hearing me? Jesus. So are we hearing me and seeing my screen? Please, I need more confirmation if you are seeing my screen, please. Thank you, Mr. Yusuf. It's not good for me to be talking to myself now. Sometimes I'm not impacting anything if I'm not responding to me. So as I was saying, that the second candle must be a doji, where the opening and the closing price are nearly the same. This candle will often gap down from the close of the first. That means, what do you mean by gap down? It will form below that red very well. Below this bearish red. It might even form like here. There will be space here before the other bullish green candle. Third candle will be a long bullish green candle that often gaps up. There will be space after the second doji candle. It should close at least halfway into the body of the first candle. That means where the candle will be closing must close at least halfway of the first candle body. The more it closes into the first candle's body, the stronger the reversal signal. You can see that this candle, the last one here, close more than it close around here, more than half the body, even close here. So it means that the buyers are really stronger. So it is expected another candle should form here to push the price up. So these are the two types candle and bullish reversal candle I want to talk about tonight. So let me stop here. Let me stop here tonight. So I don't want it to be too much. So if you go to your RoyalQ app, you'll be able to identify those. You can say, okay, let me go out. And those bullish reversal candles is more reliable on the weekly and the daily the weekly, daily, and 4-hour charts. If you see them on the lower time frame, they are not reliable. So let's check here if we can see any of those candles here after a downward trend. Let's check your daily charts. Okay, this is a very good example. This is a very good example. This one. After this downward trend, a candle here formed with a very small body. It's like a pin. So they call the bullish reversal pattern the hammer. They also call it pin, but it's like normal pin. Pin bar. I know seeing that the head is very tiny and long tail. This is it. I hope we are seeing it. Sorry, I'm coughing. This is it. That long, tiny is a bullish reversal pattern. And the movement, it moves really up because the last price at the end of that tail, That price was what I was expressed that was the lowest price that the sellers push the price to. Thereafter, the bears and the bulls, the buyers now rejected that price. Say, we no go agree, we no go allow you to put this coin lower than this price again. We no go agree. So they rejected that price that the sellers were offering. They said, no, we go collect that price from you. That's when this coin began to move up. See the price from this lower, see the price of this coin here. So this coin might be has gone up like maybe like by 15%. So that's a very good example of let's look at any corner that's formed so that we can see that kind of candle there. Not here. Are we seeing it? No, this is not a very good example, but it's like a type of armor. See it, it's armor or pimba, but it's not at a downward, so it's not reliable. It's supposed to be like in a downward trend here. This one it's supposed to be like in a downward trend here down. Especially if it breaks down on the Bollinger Band. If you see a hammer or a pin bar at the end of this, I like that kind of trade. I can confidently enter that trade if I see a downward trend that now reach this end of the Bollinger Band. And I saw a pin bar here. Forget it, that come at the end of a Bollinger Band here. And the pin bar breaks out of the last line. That come will pump. I can enter that code with my two chests. So let's look for another good example. Another one here. Here. I hope we are seeing it. It's a very good example of pin bar or armor that was formed at the end of the downward trend. It touched the lowest line on the polygamma and the coin flew. It flew away and away. It flew and away. If the coin flew, but that pin bar is a very so the pin bar or the armor might be red or might be green. Doesn't matter. It doesn't matter. It might be red or might be green. The green is more better, either red or green. So these are examples of bullish reversal patterns. So let me see if I can identify a morning star at the end of downward trend. This one won't resemble now. Yeah, I'm also learning. It's almost resemble it, but not really like it. See, this is downward trend. And at the end of the downtrend, they told us that the morning star comprises of a very big red candle, and then if the downtrend, then a doji. So a doji must be a candle that has a very small, tiny body. Then the candle that must form after that doji must close more than half of the first red candle. So it must be big like this, more than half or close to the opening price of the former red candle. If you identify those kind of pattern, but at least it made this coin still moved. It's like that's morning star, but it's not really like really morning star. So let me look, see if I can see another one. And here is not. So this is another one. But this one is a pin bar. It's an hammer. And the coin flew. And the coin flew. Engineer. It's another very, very good example of pin bar. At the end of this down trend, you see this pin bar breaks out of that polygon and forget. Come from. So let me stop here for tonight. Came room for questions. What's what? So let's give room for questions. I'm supposed to go to the next agenda, but let me stop here. Any question? Any question? I wanted us to learn about, I think I will start with that one next week, on Friday. On Friday, I will start with, Friday. Okay, I will try and see if I will be able to do training, but I will try. I will try. Any question before we call it a night? I want to stop here.